Hello and welcome to KFX Trading. If you're new, please smash that like and subscribe button. Now I've covered this trade a billion gazillion times, but it is absolutely one of my favorite trades. It's a textbook trade. It's a simple trade. It's the push pullback continuation play. It doesn't get much easier or better than this. You simply need the market to have an initial push. Okay, we're breaking highs, we're breaking out, and then we retrace, and at that retrace, the market to give you a reason to enter the trade. And the reason is price action. We're looking at rejection candles, looking at we're looking at piercing patterns, bullish engulfing patterns. I like bullish engulfing patterns, but sometimes that large bullish engulfing candle is just puts so much risk there, and your risk then to reward just gets impacted. So I like more of rejection candles or a piercing pattern. Okay, if you don't know those things, you need to look at the price action course. You need to know price action. Price action really is king. So what do we have? We have a market that pushes up, a market that retraces, gives you a reason to enter this trade long, to have that momentum continuing and pushing to the upside and hitting your targets. Your first target can always be a swing high, or as I do, 15 to 20 pips is my base trades. So let's have a look and see how this bad boy played out. All right, here we are. And as you can see, let's just have a look at this. This market shot up. We've broken these highs here. We've pushed up, we've pushed up, we've pushed up. We've retraced, and now we're coming to this 9 simple moving average. Let's just see what price action gives us, and if we get a lovely entry to go to the upside. Let's see what happens. Right now it's looking good. I don't know if this is going to be it. I'm hoping we go a little bit further down. We make some distance from this swing high. But it's just been one strong push, and this is what I mean. You need these large, strong pushes to happen. Then the market starts to retrace and gives you an entry. Okay, see, we've had this push down. We've made some distance from this swing high, and we're starting to reject to the downside. So we're failing to push lower. I really like this. Let's just see if it gives us a reason to tell us that, hey, we're not going to go any further lower and we want to start pushing to the upside. We'll scratch that. It looks like it's pushed even lower. Or maybe not. Let's see how this candle ends, but it's actually quite large. Okay, so this is looking even better. We've had this huge rejection candle, another little candle, and another rejection candle to the failing to go to the downside. So we've developed this little base here. If you can see, there's this base. This is beautiful price action. Again, the risk to reward, I'm going to just go ahead. I'm going to put a buy stop here for 10 seconds. But look at the distance from this swing high to here. That's great. So we're risking much less than our reward. Price is failing to go lower. Got 1 second. And the swing high here, this can be our first target, or if you like me, 15, 20 pips is what I like to aim for. Let's see if we get triggered in, but the market's failed to go lower. All right, beautiful. Just gonna go ahead and I'm gonna adjust this. And let's see. Let us see what happens. All right, so the market's hesitating to push up. All right, we've tried twice, and we've failed to actually push up. It's still, to me, looking like a great trade. There's nothing to invalidate this trade. It's still all bullish. We've had this huge push up. We've had a retrace. We're failing to go lower. We're just moving a little bit sideways. It looks like the market wants to make us work for a little bit, but I still have no reason to cut this trade. You always need to give your trades time to breathe. Sometimes they work in 1 minute, 2 minutes, and sometimes they take that little bit longer, but don't be fearful. Don't just cut this trade now. You need a reason to enter a trade, and you need a reason to cut a trade. Right now, this is the tightest we can be. This is where the invalidation would be. If we broke this, stop loss, that's that. But here, the fact that we're just going sideways just tells us we're struggling a bit. We're building up that moment. Here we go. We've pushed up. We've broken up out of this, so this is beautiful. The next point of invalidation would be here, this swing high. If we hit this swing high and we actually fail to break and close above it, that to me would be invalidation. But look at that, it's just blasting through it. It's just blasting through it. I absolutely love this. Look at this, we're getting very close to our take profit. Very, very, very close. We've broken and closed above these swing highs. That is a huge sign. Here we go. Bang. All right. Absolutely beautiful. Absolutely beautiful. Let's push this down a little. Target hit. These are your areas of interest. This could have been your first target. If you got minis on, take a couple of contracts off. But whenever the market struggles to break and close above this area, that's when I like to put my trade into break even, my stop loss at break even, just in case it reverses. But this is beautiful. It just blasted through it. Absolutely lovely trade. The initial push up, the retrace, market fails to go lower, put your entry, market momentum triggers you in. It just doesn't get much better than that. This was a 1, 2, 3, 4, 5 minute trade. All right, took 5 minute, 1 minute time frame. Lovely. Let's just jump back on trading view into our little diagram and explain this in a little bit more detail. All right, here we are. So what do we see? We've seen that initial push. Why is that initial push so important? Because it's telling us the market's picked a direction. Okay, it's telling us we're going in that direction. And then the retrace is just profits being taken. You know what I mean? Liquidity forming, market then maybe starts to consolidate, but the market retraced, gave us that reason. You've seen those rejection wicks to the downside saying, hey, we're stopping here. We're not going to go down any further and we're going to continue pushing up. Absolutely beautiful textbook trade. Remember the key area, huge push. You have that huge push. The push needs to break highs, break swing highs or somewhere around here. Retraces, gives you that reason to enter the market. Put your trigger, put your entry above those candles and wait for the market momentum to trigger you in. And then just trade and earn. I hope that made sense. I've covered this many times and I'm going to cover it many more times because they're just beautiful and you've seen how many times I've taken this trade. Okay, just over and over and over again. Absolutely lovely. Hope that makes sense. If nothing's unclear, drop something down in the comments, message me. I'm here to help.